Welcome to my daily review. Today is Thursday, April 10th, and today we saw the Nasdaq give a little bit back yesterday after the record rally or furious rally. Not record, it was the second highest percentage gain on the Nasdaq we had on Wednesday. There you can see the big blue bar here. And then today we just had an inside day. Kind of nice to be down 737 points or 4.31% and just have an inside day. You can see the volume has been pretty massive here recently, up 47% above the 50-day average volume. The index closed at 16,387. I mentioned the furious rally on Wednesday where the Nasdaq gained 12%. Its biggest percentage gain was January 3rd of 2001 in the midst of a nasty bear market, the Nasdaq's worst bear market, a 3-year bear market where it lost 80% of its value. And we got another bear market rally here on Wednesday, 12% move. So we gave 4.3% of that back. That's to be expected. I just want to keep an open mind here. Everybody's really negative and really bearish. But today was just an inside day. It closed around the middle of the daily range there. You're making higher lows. We had this low on Monday, 14,784. It's a low. I'm not saying it's the low, but it certainly could be the low. I got to keep an open mind and not get too negative here. It was down more than 2% on Tuesday, had the big rally on Wednesday, and then gave 4.3% back today. So that's kind of to be expected. Just the lows. Just notice the lows. We keep trending higher here, and we have a lot of work to do. You can see the index is still 11% below this 200 SMA, this black line, the long trending moving average. And as long as it's below this black line here, I'm not really excited. I always ask, the folks at mcstockcharts.com, is the market worthy of our hard-earned dollars? And I'd have to say at this point, no. Why not? Well, like I just said, it's 11% below the 200, okay? And it's not in if we had a fall through day tomorrow, which would be 1% or more, and with volume above today's volume, that would be a follow through day. And then, I might, get a little more aggressive in the market, but I'd kind of like to see it take out the 17,202, which was the high from Wednesday. And it didn't even come close to that today. 16,712 was the high today. It was like more than 500 points off, or about 500 points, 490 points from taking that out. So it'd take a massive rally here to get above there, but that would definitely make me more bullish. But you got the 50 crossing the 200. I'd really like to see, it overtake this 200. But shoot, just a rally up to the 200, 11% rally. I think we would all take that, even if it got rejected there. Just a relief rally. It's been a really long time since we've been able to just celebrate a win on the long side. I know we had that big move yesterday, but that was just a short covering, bear market rally. We need to see something sustained. I'm in the camp, that this was a leg down. I'm getting a lot of pushback from my trader technical friends, but I don't care because a lot of the leading stocks got hammered during this time frame, rallied back up to 2110, and then had this second leg down where it had this little bull wedge pattern and then just hellacious drop on where it hit the low on Monday. So to me, that's 3 legs down. But we could have another leg down, take out that low there. What I said, Monday's low was 14, whatever, 784. Very possible. It's not, it's what, 1,600 points away from there. Could do that in a day, the way things are going. You see the wide and loose action. You see how big these daily bars are. And that's the enemy of a swing trader. Swing traders like this tight trading action above moving averages here. You could see the index just tight daily moves above the 21, comes down, finds support, just gently riding higher. That's the type of action a swing trader likes. Right now, you can't hold a stock, overnight. You wake up the next day and you're down, 5, 6, 10%. So it's just a little too treacherous. it's a news driven, and a tweet can move your stock 10, 20%. It's moving the market. It's just pushing it around, just one tweet, so it's not a healthy market, but I'm just trying to keep an open mind that we could be experiencing something like, tw 20, the end of 2018 and the first couple months of 2019, where we saw this three-legged legs down. Course, situation was a little different here. Yeah, we were in a trade war with China. There was, interest rates, that were raising, and Trump wanted lower interest rates, but the economy was a little different at this time as well. Our economy is not as strong right now. It's okay, but it seems to be slowing. You got oil prices really cratering too, and the dollar got shellacked today. But anyway, I don't want to get into bonds and dollars because it'll all show up in the stock market. All that stuff is just secondary indicators. It'll show up in your charts. Here's the SPY. Still, inside day, just like the Nasdaq, down 4.3%. Sounds strange. An index down 4.3%. It's just an inside day. But yesterday, I mean, it traded up to the 21 here, and you can see it got rejected. And then today pulled back. And I saw a ton of charts today where stocks got, they traded up to a moving average on Wednesday and just got shellacked today. Just rejected. It got the Matambo treatment, and that's what happened here to the S&P, where it got rejected at the 21. You could see right now it's 8.6% below this black 200 simple moving average. So not real healthy here. 4.38% is not a good move, but the RSP didn't go down as much. This tells you that it was the Tesla, the Nvidia, the Apple, the Microsoft that were driving the index is lower today, and not the other 493 stocks, although down 3.3% is not a picnic by any means. RSP rallied up to its 10 and got rejected today, but just an inside day. The IWM is the weakest of these indexes, rejected at the 10 inside day today. This thing is miles from its 216.7%, or 4.2% loss today. And the Dow Jones Industrial Average lost 2.5% today. There you have it, just an inside day. And this one's 6.1% below the 200. Anyway, what was I going to get to? Oh, some of the best looking charts, I got to tell you, because I mentioned the IWM is the weakest of these indexes, and this is TZA, which is a three times bear. This one was up 12%. And if you just looked at, if you looked at this, you're thinking like, if this is a software name, you're saying, hey, this thing's starting to break out of a stage one base here. Yeah, it pulled back. It's down 7% this week, but it's had a nice run off the lows, and a pullback, is healthy, after a big run up. So all I did is pull back to its 21 on Wednesday, found support, nice bounce today. SQQQ is the same thing. These are, just kind of directional, three times leveraged, short vehicles to play the market. SPXU is another one. This is a short, the three times inverse the daily performance of the S&P 500. Same type of profile, pullback, found support, inside day today, up 10%. So those are just some trading vehicles if you want to play the short side. No, there you go. On the weekly, you got a little stage one base there. So, I'm not rooting for anything. I'm just trying to play the market as it, just trying to take what it gives me, actually. And it's not giving us much on the long side. So these are the vehicles, on the short side that I'm looking at to trade. I'm not one to hold it overnight or weeks and try to swing trade these thinking that it's going to be, all peaches and cream on the short side, because it's really hard to make money on the short side too. So even in a downtrending market, you get a day like yesterday. I was watching the TZA yesterday, and I mean, if you held that thing on Wednesday, after the big tariff news, you're down 25% in a day. 25% is a lot, especially if you have size, price Price hurts, but size kills. And if you can't get big in something like this, you just absolutely get crushed. It moves way too fast. All right. That's it for the indexes, the Nasdaq. I do want to take a look at some of these Mag 7 stocks because they were driving the index lower. This is Apple, obviously has a lot of exposure to China, so the tariff news is hitting this stock on a daily basis. Had the big move yesterday, that big hammer candle, and then 15% move yesterday. Just an inside day, giving back 4.25% for Apple, consolidating in a pretty wide base here from 260 all the way down to 169. So that is a big base. The depth in that base, yeah, it's 27% off of its 52-week high. So anyway, Microsoft, another one. Oh boy, this thing looks terrible. Inside day today, down 2.3%. Google, probably the worst looking, between Microsoft and Google. Whew. Inside day today, rejected, they're at the 21, which we're seeing a lot of today, which I'm going to get to in a minute. Here's Meta. It was below the 200. Yesterday rallied, up to it, closed slightly above it. And what happened? It got rejected today and now closed 5.5% below that black line there, that 200 simple moving average. So not a healthy market, folks. I mean, you got to have leading stocks to lead the market higher, and we just don't have any. And these former leaders are just getting absolutely crushed. Like I said, they're overloved, they were overowned, and now the trade is unwinding here, and it's not very pleasant. This is Amazon traded up to its 21 yesterday on that real violent move higher, and just an inside day today, but got rejected there at that moving average. And then Tesla, tried to get up to its 200. It did on this day at 291, got rejected, tried to rally back up, couldn't do it, got pushed down. Big rally yesterday, and it still was far and away, 6% away from the 200 inside day today. So Tesla is incredibly weak, and so is Nvidia. This is one that I was watching for a short today. Why? Well, because it's super weak and it got rejected at its 21. So I expected it to go lower. Took a little bit of time here. Gap lower, kind of traded sideways, and then we got this crack below 106.94. It rallied back towards the end of the day above that 106.94 and closed at 107.57. But good little trade for a some puts on the day anyway. This is a bear market, and that's just the type of action you're going to get in a bear market. So you just got to play with, like I say, with what the market gives you. All right, I got to go to what was working today. Well, I posted at mcstockcharts.com the commodities, and the only commodity that was up this morning was gold. So the gold stocks are outperforming. I have a friend who says, "Oh, they're done. They're going to crash and burn." And I really thought they would, but all they did was come back to their 50. A lot of them here found support, now bounce, making new highs. Okay, up six, nearly 7%, while the market's crashing is showing relative strength. And this is the kind of like the sole source of strength in the market today. I mentioned the weak dollar, but yeah, gold was really strong. I ran a couple of screens last night. I ran a lot of screens, but two that stuck out to me. One was, I like sales and earnings, and I like, growth. And this one has 14, 19, 31, 39, which is fine, 39. But when I go for a real stringent sales growth, with a little bit of earnings, with volume. These gold stocks aren't quite there above 40, but they still have nice accelerating sales growth. And these are the leading stocks in the market, like it or not, like it or not. Like I say, you got to play with what the market gives you, and that's what it's giving you. Right here again, you got 27% sales growth, 31, which is good. It's not phenomenal. It's not software type numbers, or maybe biotech or drug numbers, but yeah, really strong numbers here. Below anything actually above 25 is good. 30 is even better. 40, I like 50, but with a little bit of earnings always helps. But these are the ones that are showing strength. And so I this one screen that I ran for volume, and earnings. Just a little bit less sales growth. The gold stocks were all over the place in this. Yeah. So anyway, AGI is another one. This one had almost 50% last quarter, making new highs today. I like sales growth because you can't fudge sales growth. Sales are sales, and either you have them or you don't. Earnings, you can kind of fudge the numbers with earnings and manipulate things and improve your earnings for a quarter or two. But yeah, sales growth, either you have it or you don't. GFI, it's either you're pregnant or you're not. These guys, they're delivering strong sales growth. It's not through the roof, but it's really strong here. 2 quarters in a row of 38% sales growth. Yeah, triple-digit earnings growth. This is Goldfield, South African company. Another South African gold stock that I like is DRD, which is DRD Gold. Did not make a new high today, just pulled back, undercut the 21 though. I mean, come on. I'm going to show you a ton of stocks that are well below. I just showed you the Mag 7. They're all below their 200. This thing's above all its moving averages here. So these are the stocks I like, above their 10, 5.5% above its 10. So yeah, that's just my style. That's all. Did I go to AEM? I believe I did. I'm losing track here. RGLD. This is, yeah, I shouldn't do that. I should stick to the script. But anyway, you can see the group, number one group, top group out of all the industry groups. 33% sales growth. HMY, I don't think I showed this one. I'm going out of turn here. Yeah. Okay. So it's got 15% sales growth, some earnings growth, making new highs today. We like new highs. Nothing wrong with new highs, right? Okay. The Canadian ones, yeah, I showed you a couple before. This is WPM. Didn't make a new high because it was over 80 last week. But we'll take it here. 78.88 was the high today. Once again, 21% sales growth. And what do we have? Oh, Orla, another Canadian um, exploration gold, mining gold stock, making new highs. So we like new highs. Got above 10 today. So yeah, you can see the sales growth here. So that one fits the criteria here, 65.47, almost. And I was looking for 50 and yeah, these ones didn't make that group, but the first screen that I posted today, it was full of these gold stocks. Anyway, that's it for the gold. I'm going to move on. A couple other names that, intriguing, doing well, kind of above their moving averages here. This is the medical managed care group, kind of a want to say widows type stocks. They pay a dividend, conservative, slow movers. And this is Cigna, United Health. This is another one in the Dow Jones Industrial Average that's in the medical managed care group. Forming a base here, and it's well above its 10, right? 8.6% above its 10. So you don't find that a lot in this current tape right now. CVS, this is one that I had on my ready list a couple weeks ago because it was trading tight within the base. Sold off hard and then rallied, had an inside day today. Yeah, not bad. CVS, just trading above its moving averages. That's what I like. Doesn't have the growth profile that I like, but anyway, just trying to show you some areas of pockets of strength in a market where it was like a sea of red today. This is Molina Healthcare. This one is 2.1% above its 10. So consolidating in a base, not bad. Yeah, that's not bad at all. Just trying to find some stocks. Okay, so that was the medical managed care. Then we got insurance, still some insurance names that are hanging in there. They're hanging around and hanging around. This one is 1.1%. No, wait a minute, excuse me. 1.4% above its 50. So, stocks above their 50, you got it in this current bear market environment. You're not finding a whole lot of stocks above their 50. That was another part of the screen that I ran, the sales with volume above their 50. There's just not a lot of them out there. So they're rare birds, they're endangered species, probably going to get whacked eventually. PGR, another one, traded down to the 200, rallied back above its moving averages. So, just pointing that out, 1.1% above its 50. That's where it closed today. So, yeah, I'm not going to give up on these insurance stocks as long as they're above, they're showing relative strength. I mean, my gosh, this is not, and those ones are doing a lot better than something like Aflac. This is your typical stock here below the 200 selling off, and just, you get these trap doors where they just fall out fast. I mean, this thing looks good, right? Consolidating within a base looks pretty good, and all of a sudden you go from, 113, what day is this? On the 3rd, and then on the 7th, a couple days later, you're at 97. So, I mean, they're falling out. There's trap doors, and that's what happens in bear markets. You can't get complacent. If you have profits, you got to take them because otherwise, that happens, a trap door, and they take your money. They steal it from you. All right, I promised some stocks that I like that just are not ready yet, or they got rejected. I was mentioning these double bottom type base patterns, but this is Uber, and it rallied up on Wednesday up to the 50 and then got rejected today, but it was an inside day, going down 2.39% after an 11% move, almost 12%. So you got to expect some give back after a move like that, but it's making these higher lows all week. It can rally through that 50. It got rejected this time, but it could rally tomorrow or next week. I'm really looking for a follow-through day next week where some of these go, blast through that 50, and they could also go the other way. They could make new lows. You got to be flexible on this tape. They can go either way, depending on the tweet from our president. You never know. All right, CrowdStrike. Yeah, rallied up to its 50 and then got rejected. Not the end of the world here. Only down 2.5%, making a higher low here every day this week. The low on Monday was 298, Tuesday 318, Wednesday 324, and then today the low is 354. So higher lows. It didn't make a higher high. You want to see it go through that 382.65, and rally through that red line here, which is the 50. So it could still do it. Just because it got rejected one day doesn't mean, tomorrow or next week it can't just power through there. Palantir, the same thing, got rejected at its 50, but these are a couple that I'm watching here for leadership. I mentioned, they all have the same profile here, this double bottom base pattern. And this is a pattern that I like, because it shakes out all the weak hands. So just because it got rejected today and it was down 3.75% doesn't mean it can't rally through that 50, like I said, tomorrow or next week. Don't count it out. One tweet and we're off to the races. All right. Yeah, I mean, if our president says, the talk with China is going well and they're our friends and, we're going to make a deal on tariffs, the market's going to rally and Palantir is going to go right through that, that red line like poop through a goose. So be flexible. Don't get negative. We could certainly rally. I just showed you the market from 2018, 2019, and the same characters are at play here. So I don't see why it would be different this time, except for the 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 economy is a little weaker this time around, and oil's at $60. Man, oil is weak. This is Fortinet rallied up to the 50. Just had an inside day today down 3.6%, but you can see it's forming a little base here. The start of a base, and like I mentioned, I believe it was yesterday, I could see these things just trading sideways, sideways higher, just making higher lows and filling out the right side of the base of this double bottom base pattern. I believe Pattern Rec will eventually, identify this as a double bottom base. And yeah, it could just go sideways and for a little bit, making higher lows, higher lows. And then all of a sudden, one day, Trump tweets and it's off to the races. We make new highs. Yippee. Everybody lives happily ever after. All right, Rubric, another one that I like. I think this one could be a big winner now. It's 11 billion. The other day I looked at it, it was 12 billion. So, I don't know. Sheesh. Once again, same profile here, double bottom base. Now, Pattern Rec is picking this up, but it's making these higher lows every day. So count with me now. On Monday, it made this low of 47.35. Tuesday, 51.71. On Wednesday, with this furious rally, the low is 52.38. Today's low is just 57.75. So I know it's discouraging if you own and it's down 5.5%, but it's making higher lows. It's forming a double bottom base. this is how bases are built. This is, you got to be patient. You got to be patient and you got to be flexible and you got to be open-minded. And you also have to be cautious because you don't want to lose money. I got a friend who, yeah, I should say this. I should preface this properly. I belong to like six or seven different services. One service that they put out like 10 trades a day, right? And, of course, half of them are good, half of them are bad. And if you're batting 500, that's fantastic in the market. If I'm batting 500, I'm kicking ass because on I'd be happy with 4 out of 10 because on your six trades that you lose, you're losing 3, 4, 5%. But on your winning trades in a bull market or an uptrending or a power trending market, you're making 20, 30, 50, 100% on a trade. So if you lose five and make 50, you could afford to lose some. And that's the math of success in the stock market. That's the whole secret to the stock market. Finding winners, letting them run, and then cutting your losses quickly. And you can afford, a bunch of losses. That allows me to take a lot of swings at different stocks, a couple of winners. This is Reddit, which I believe will be a big winner. But anyway, rejected at 200, just had an inside day. So it needs to rally through the 200. Shopify, same thing, rejected at the 200, just an inside day. These are just some of the software names that I'm watching. Spotify, another one that I like, double bottom base pattern once again, rejected at the 50, just an inside day, down less than 3% today after, a big move yesterday. That's not bad. You're up, 10%, you give back three. I'll take that all day long. Once again, same profile this week. Higher lows on all these stocks that I'm showing you here. DoorDash, another one that I like, believe is going to be a big winner here. And Pattern Rex picking up this double bottom base now. So, yeah, you're going to see maybe next week or a week or two a lot of stocks here. That's what sell-offs or bear markets do. They set up charts and patterns and they wash all the sellers out. And eventually they set up winning stocks and bases, and eventually they take off. You just got to be patient. You got to be vigilant. And you got to have discipline. GoDaddy, I think this trade's over for GoDaddy. Rejected at the 200. Why do I say that? Well, it had this big run. I mean, this is like Abercrombie and Fitch, where it had this big run and now it looks like it's in the, stage 4 decline. GoDaddy is not that far along like Abercrombie and Fitch and Elf and Celsius and all those. But yeah, it's got that look. Anyway, it's stage 1 because it undercut the prior base. All right, let me move along here. GEV, I've got to diversify a little bit. The energy names, this is the one that I like, but it rallied up to its 50 and then I had an inside day today. So not bad for GE Vernova. And Vertex, got to go to a drug stock, rallied up to its 50, pulled back today. It was down only 1.4%, but yesterday it was only up 2%. I saw that with a lot of drug stocks. They didn't go up that much yesterday, but they didn't go down that much. They're kind of more even keel than some of these schizophrenic moves that we're seeing from some of these other names. Gilead's another one. Schizophrenic. This is like Sybil, man, like with 23 personalities. Um, this is Gilead. Yeah, it was only up 2% yesterday and gave back 3 something percent today, but it's still an inside day, but just rejected at the 50. This looks to me like a double bottom base too, forming. So give it some time here. Yeah, traded down to 104, up to like 116, then pull back, and now it's going to form this double bottom base pattern, I believe. Just got to give it time. Anyway, that's it for me. Thank you for watching at mcstockcharts.com. We never give up. In honor of the great Steve Jobs, I do have one more thing. And Peter Falk, the unassuming detective, always had one more thing. I mentioned the screens that I ran. I ran a bunch of them, just trying to find strength. I'm always looking for strength in the market. I'm not really interested in picking, the lows of a stock, although that is quite lucrative for those who use that style. That's just not my style. So I'm looking for stocks, with sales growth. And this is AXSM, 66% sales growth. Like I say, you can fudge the earnings, you can't fudge the sales. Um, This is not a stock that I like particularly right now, below, all its moving averages, but one that I'm going to watch for and see what they have to say at earnings time. I believe these are in alphabetical order. I didn't really even look at the charts that closely, but this is Alpha Technology. Once again, it's got triple digit sales growth and you can't fake sales. So, earnings come after the sales. So this one's got this, pennant type pattern there. So if it can break above a downtrend line, that would be an area of interest. It's got this little higher low pinching in this little pennant type pattern. That's ATGL. And these, that was totally thin stock. Calm is another one. Calmain, this is a food product stock. Let me see here. Uh, Got rejected at its 50. Yeah, I think they just reported earnings like yesterday or the day before. But look at the sales growth. So that kind of draws me to these certain names. Equitable Holdings Finance, great sales growth. So something to watch for. Below that, I don't like it below, that far below. FRHC, another finance investment. This is my Kazakhstan. Um, Sasha Cohen. What's his name? I forget the guy's name. It escapes me now. He made that funny movie. Anyway, he's made a lot of funny skits. Anyway, it's got this double bottom base pattern going here. Traded down to the 200, found support, had an inside day today. So that one looks okay. But yeah, 57% sales growth. I think I put the criteria at 50, and HIMS is definitely one, down to the 200. It's got the sales growth that we like, and not enough strength here. I don't know what I'm doing here. That's not what I'm looking for. HIPO. HIPO Holdings got, yeah, nice, strong, 50% sales growth. IDCC, I believe I put this on the ready list last week or the week before. But it's a bear market, undercut the 50, rallied back up to it, got rejected like I just showed you a bunch of stocks did. But 140% sales growth is always going to catch my eye. INOD, Inno data. This one I believe could be, it's a 1.1, billion market cap. I mean, so the one to watch. It's got triple digit sales growth, could be, a big winner. I mean, if it goes to 5 billion, it's, a five bagger, 6 billion, and it could go to 11 billion, it'd be a 10 bagger. Why not? As long as these sales keep increasing, the earnings will come. A couple other names that I got to get to. LB, I mentioned this one in the oil and gas space. Oil is just so low right now. These stocks are getting hammered, but it does have the triple digit sales growth. NTRA, another one that I like in the medical research group, 53% sales growth, nothing to sneeze at. Finding support at the 200. Root, this is another one of those insurance names. Got rejected at the 50, like so many other names that I just showed you, but 68% sales growth. Yeah, it's decreasing, but as long as it stays above 50, I'm watching it. TARS, a medical biotech stock. The double bottom base you can see here. Yeah, kind of like the looks of this. Supported at 200 inside day today, but tremendous sales growth. And then TGTX, one of my holdings here. It's above the 50. I think it closes, 1% above the 50, which I like. When not many stocks are doing. Pulled back to the 50 for the first time since the breakout. But I mean, we're in a bear market here. Tremendous sales growth and definitely one to watch. So it's got the volume, it's above the 50, got the sales growth, a lot of components that I like. Anyway, that's it for me. Except for I lie, I got one more. Another drug stock, WGS. Yeah, I like this one. It undercut the 50, now closed above it. 3.8% above the 50, 3.4% above the 10. It's got strong sales growth. They're going to report on the 30th. So it's right around the corner. All these companies are going to be reporting earnings. So more will be revealed. Thank you for watching at mcstockcharts.com. We never give up.